Hi everyone, welcome to Info Dimensions channel. Today we shall answer the 50 most frequently asked questions in terms of Takaful for its understanding. Question number 1. What is Takaful? Takaful is an Islamic insurance concept that operates on the principles of mutual assistance and cooperation. It provides protection to participants in a Sharia-compliant manner. Question number 2. What are the main principles of Takaful? The main principles of Takaful include mutual cooperation, shared responsibility, transparency, and adherence to Islamic ethics and Sharia law. Question number 3. What are the key differences between Takaful and conventional insurance? Takaful is based on the principles of risk sharing and mutual cooperation, while conventional insurance operates on a for-profit basis. Takaful is also structured to comply with Sharia law. Question number 4. What are the different models of Takaful? There are two main models, Modarba and Wakala. Modarba is a profit-sharing model, while Wakala is a fee-based model. Question number 5. How does the Modarba model work in Takaful? In the Modarba model, participants contribute to a common fund, and the Takaful operator acts as the Mudarib, that is entrepreneur. Profits are shared between participants and the operator based on a pre-agreed ratio. Question number 6. What is the Wakala model in Takaful? The Wakala model involves participants paying a fee to the Takaful operator for managing and administering the Takaful fund. The operator does not share in the profits or losses. Question number 7. How is Takaful structured to comply with Sharia law? Takaful is structured to ensure that investments and operations are in accordance with Sharia principles. Sharia boards or scholars provide oversight and guidance to ensure compliance. Question number 8. What is the role of a Sharia board in Takaful? A Sharia board ensures that all Takaful operations and investments comply with Islamic principles. They issue fatwas, that is Islamic rulings, to guide the company's activities. Question number 9. How are Takaful contributions determined? Contributions are determined based on the type of coverage, the participant's age, and the level of coverage required. Actuaries play a role in calculating contributions. Question number 10. How are Takaful funds segregated from the operator's funds? Takaful funds are kept separate from the operator's funds in designated Takaful accounts. This segregation is done to ensure that participants' funds are not mixed with the operator's capital. Question number 11. How are Wakala fees determined in Takaful? Wakala fees are typically determined through negotiation between the participants and the Takaful operator. They are agreed upon in advance and are often a fixed percentage of contributions. Question number 12. What is re-Takaful in the context of Takaful? Re-Takaful is the process by which Takaful operators transfer a portion of their risk to a re-Takaful operator. It allows Takaful companies to manage their risk exposure. Question number 13. How does re-Takaful work? Takaful operators purchase re-Takaful coverage from a re-Takaful operator, who agrees to share in the financial responsibility for claims made by Takaful participants. Question number 14. What are the key considerations in selecting a re-Takaful partner? Factors such as the financial strength of the re-Takaful operator, its track record, and its adherence to Sharia principles are important when selecting a re-Takaful partner. Question number 15. How are surplus funds distributed in Takaful? Surplus funds, after claims and expenses, are distributed among participants based on a pre-agreed ratio. A portion may also go to a charitable fund, that is Tabaru. Question number 16. What is a Takaful operator's role in managing investments? Takaful operators manage investments in accordance with Sharia guidelines, with a focus on ethical and Sharia-compliant investments. Question number 17. How are Takaful operators compensated for their services? Takaful operators receive Wakala fees for managing the Takaful fund. These fees are predetermined and agreed upon by the participants. Question number 18. What is the concept of Tabaru in Takaful? Tabaru is a voluntary contribution made by participants to a charitable fund. It is used to help fellow participants in times of need. Question number 19. How does Takaful ensure fairness and equity among participants? Takaful operates on the principle of mutual assistance, where the risks and rewards are shared among participants, promoting fairness and equity. Question number 20. What is the difference between a Takaful operator and a Takaful participant? A Takaful operator manages the Takaful fund, while a participant contributes to the fund and is eligible for coverage. Question number 21. What is the role of a Takaful operator's shareholders? Shareholders provide the initial capital for the Takaful operator and may receive dividends based on the operator's profitability. Question number 22. How are Takaful operators audited to ensure compliance with Sharia principles? External auditors, often with expertise in Islamic finance, review the Takaful operator's financial statements and operations to ensure Sharia compliance. Question number 23. What is the role of a Takaful operator's investment committee? The investment committee oversees the Takaful operator's investments, ensuring they are in line with Sharia guidelines and the participants' best interests. Question number 24. How does a Takaful operator handle claims? Takaful operators assess claims based on the principles of fairness and equity. Claims are paid out from the Takaful fund, and any surplus is distributed among participants. Question number 25. How does Takaful protect against moral hazard? Takaful uses the principle of shared responsibility and mutual cooperation to mitigate moral hazard. Participants have a vested interest in the fund's well-being. Question number 26. What are the key financial statements used in Takaful accounting? Takaful financial statements typically include the statement of financial position, statement of comprehensive income, and statement of changes in equity. Question number 27. How are investment returns in Takaful accounted for? Investment returns are accounted for separately and are typically shared between the participants and the Takaful operator based on a predetermined ratio. Question number 28. How are Takaful contributions invested? Takaful contributions are invested in a Sharia-compliant manner, often in assets such as sukuk, that is, Islamic bonds, equities, and real estate, following guidelines provided by Sharia scholars. Question number 29. How is the surplus distribution ratio determined in Takaful? The surplus distribution ratio is determined in advance and agreed upon by the participants. It specifies how surplus funds will be shared among participants and any charitable contributions. Question number 30. How does Takaful handle investment losses? Investment losses are borne by the participants in proportion to their contributions. Takaful operators do not guarantee a minimum return on investments. Question number 31. What is the role of a Takaful operator's actuary? Actuaries play a crucial role in assessing risk, calculating contributions, and ensuring the long-term financial sustainability of the Takaful fund. Question number 32. How does Takaful address issues of adverse selection? Takaful counters adverse selection by encouraging a broad and diverse participant base. Shared risk and mutual cooperation minimize the impact of adverse selection. Question number 33. How are Takaful operators regulated to ensure compliance with Sharia principles? Regulatory bodies in Islamic finance jurisdictions oversee Takaful operations to ensure they adhere to Sharia principles and meet financial solvency requirements. Question number 34. What is the role of a Takaful operator's risk management department? The risk management department assesses and mitigates risks to the Takaful fund, ensuring its financial stability and the protection of participants' interests. Question number 35. How does Takaful handle investments in non-compliant assets? Takaful operators are prohibited from investing in non-compliant assets. If any such investments occur, they must be divested immediately to maintain Sharia compliance. Question number 36. How does Takaful ensure transparency in its operations? Takaful operators are required to provide participants with regular financial reports and disclosures, ensuring transparency in fund management. Question number 37. How does Takaful determine the coverage amount for participants? Participants can choose their coverage amount based on their needs and affordability. Actuaries assist in determining the appropriate level of coverage. Question number 38. How are claims investigated in Takaful? Claims are thoroughly investigated to ensure their validity and compliance with Sharia principles. This investigation helps prevent fraudulent claims. Question number 39. What is the concept of risk sharing in Takaful? Risk sharing means that participants collectively bear the financial burden of covered losses, which is a fundamental principle of Takaful. Question number 40. How does Takaful handle situations where the fund faces a deficit? In the event of a deficit, participants may be required to make additional contributions to cover the shortfall and maintain the fund's financial stability. Question number 41. How does Takaful encourage ethical behavior among participants? Takaful promotes ethical behavior by aligning the interests of participants, emphasizing shared responsibility, and adhering to Sharia principles. Question number 42. What role do Sharia scholars play in Takaful operations? Sharia scholars provide guidance and oversight to ensure that all Takaful activities, including investments and operations, comply with Islamic ethics and principles. Question number 43. How does Takaful handle investment income earned on participants' contributions? Investment income earned on participants' contributions is typically shared between the participants and the Takaful operator based on a predetermined ratio. Question number 44. How are Takaful operators evaluated for their financial strength? Rating agencies specializing in Islamic finance assess Takaful operators' financial strength and issue ratings to help participants make informed choices. Question number 45. What is the role of a Takaful operator's compliance department? The compliance department ensures that the Takaful operator's operations, investments, and activities adhere to Sharia principles and regulatory requirements. Question number 46. How does Takaful address the issue of fraudulent claims? Takaful operators employ rigorous claims investigation processes to detect and prevent fraudulent claims, protecting the interests of honest participants. Question number 47. How does Takaful handle contributions from participants with different risk profiles? Contributions are typically determined based on risk profiles, with higher risk participants paying higher contributions. This ensures fair and equitable pricing. Question number 48. How does Takaful handle the payment of contributions in case of default? Takaful operators may suspend coverage if a participant defaults on contributions, but they must refund any excess contributions paid by the participant. Question number 49. How is the surplus distribution process audited for fairness? Independent auditors review the surplus distribution process to ensure that it complies with the agreed upon ratio and is fair to all participants. Question number 50. What is the role of a Takaful operator's internal Sharia audit department? The internal Sharia audit department ensures that all aspects of the Takaful operation are consistently and rigorously reviewed for Sharia compliance. Thanks all of you for watching this video on the 50 most frequently asked questions and answers for the purpose of understanding of Takaful. I hope you liked this informative video, and for more upcoming presentations and videos, please like and subscribe our Info Dimensions channel.